So we have with us Tim Buchner, who's COO of Mercatus. Thank you for joining us.
Thank you. Nice to meet you.
So first of all, Mercatus, what is the latest news?
Well, a lot of exciting things happening at Mercatus. So we are a software company based out of the Silicon Valley that's recently expanded over the last year and a half into Europe. And in doing that, we've been helping some of the largest power producers in both Europe and the US really digitize their environment. Today, one of the biggest challenges that a lot of utilities face is the challenge with data and how that data flows and doesn't flow across business function to enable fast transactions. So I just came from a seminar where we talked about blockchain and how important 10 years from now that technology is going to be for a power producer. And so today, what we're doing is helping them with compliance systems and helping them with repeatability and scalability in the current environment.
Okay. Now getting deals done in renewables, what are the major challenges there?
Well, I mean, part of the challenges in renewables, it's an ever-changing environment today. And how an investor sees a developer and how those rule sets change pretty commonly is pretty difficult for the environment. So I would say that today, the biggest challenges in the sector are most companies no longer have incentives. So they're having to look at how do they get lean and mean, how speed can be an enabler, and where do they look for a competitive advantage.
Okay, so speed is a key. You mentioned it twice. Yeah.
Speed is a key.
Okay. Now, in terms of regulation and compliance, what is the role of regulation and compliance?
Well, this kind of goes on your last question. I think part of the challenge that we have in the sector today that's preventing some deals getting done at the highest profits is the uncertainty of regulatory. And so there's so much happening in the market today and so much uncertainty in certain regards that it's challenging for developers. And then on the compliance side, it's a moving target. Investors' compliance systems don't really exist, and so there needs to be a repeatable way in which their ever-changing needs can be put into a compliance system, one that really mirrors their best practices and needs, and that's very much what we do.
Okay. Is that driven by politics? Is that driven by international cooperation? What is moving that forward?
Well, I would say all of the above. Part of the finickiness of an investor is that the change that occurs is sort of uncertain, which means Treasury may be overwhelmed in a certain part of their balance sheet in one area or another, or an investor may be out of a fund. And so the challenge is, as they come in and out of funds, as they come in and out of syndicates, how you have a compliance system to be able to support that, how you have a system that mirrors that change.
Right. So getting deals done requires innovation as well,
continually.
It does.
Yeah.
But what innovation do you expect to see in the next 5 years, or what is required?
Yeah, I mean, for us, when you think of our vision is to create an infrastructure that allows for a power producer, a developer, to ultimately have an efficient market environment where they can collaborate in a single place. If you think about what Bloomberg's talking about today, through 2020, there's trillions of dollars that will be put into our sector. What we're chasing and excited about is that that trillions of dollars needs to have an effective mechanism in order to transact. And so for us, having a market environment where buyer and seller can work in a collaborative way, and we'll call it third parties to be able to do that, we think is pretty exciting.
So really developing markets and getting the two sides together, or the multiple sides together.
Exactly.
Yeah.
Exactly.
Okay, now in terms of risk for investors, how are risks changing, or how is the risk profile of investors changing, and what has happened in the last few years?
Yeah, well, it's a tumultuous environment. You've seen tons of consolidation. Some companies have gone out of business. And as a result of that, I think in certain regards, a lot of investors have really struggled with what premium am I going to put on this asset? So how do I know to buy that corporate entity? What is it worth? Because there is a lot of risk. And so I think the important thing is that the asset class is not a risk. So really it's about the transparency in the asset class to know fundamentally, does this meet their needs or not? Because we've seen the scale in solar, we've seen it in wind. So investors should feel certain if they have a compliance system. So I keep going back to compliance system because I think that having the right tools to digitize both sides, the buyer and seller, are pretty important in how data flows between. So you ideally would have a mechanism to actually create learning engines and machine learning to actually better inform those developers, those investors. So ultimately that risk premium isn't one that they feel like they have to arbitrarily use. Yeah.
Are investors becoming more demanding?
I think investors absolutely are. So they go in waves. You have the excitement of what's happening in the market. There's something new and exciting, and so you can feed a lot of into the beast. the flip side of it happens when you do have consolidation and you do have companies going out of business. It causes room for pause. So I do think that the risk is feeling like it's increasing, but ultimately as the asset class again, I don't think it's that. It's more the companies themselves and the pipelines themselves. So they need the transparency.
Great. Tim Buchner, thank you very much for the time.
Thank you.